Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company filings to uncover the real story behind the numbers. And today we are looking at Autonomix Medical Incorporated with a filing that is essentially a roadmap for selling more stock. It is a bit of a complex dance between the company and its investors. So let's break down what this S-3 registration statement really means for everyone involved. So what exactly is this document? Well, it is a registration statement filed with the SEC, the Securities and Exchange Commission. Think of it as a formal announcement that Autonomix Medical Inc. is preparing to potentially offer more of its stock to the public. It is filed on Form S-3, which is a simpler way for companies that are already public to register securities. This particular filing is all about allowing a specific investor identified as the selling stockholder to resell shares they already own or are soon to receive. Autonomix Medical is a company focused on developing medical devices. They are working on a technology that combines sensing and therapeutic radiofrequency ablation to treat disorders of the nervous system. Initially, they are targeting pain associated with pancreatic cancer, but they see potential for a much wider range of applications like chronic pain, hypertension, and cardiovascular disease. Their technology aims to detect neural signals with more sensitivity than what is currently out there by processing signals right at the source with a microchip. This is pretty advanced stuff. This number here is the registration number assigned by the SEC. This is the government body that oversees the stock market and ensures companies are transparent with investors. This tells us the type of document and the law it is filed under. The Securities Act of 1933 is all about making sure investors get accurate information when they buy stock. This indicates that Autonomix Medical Inc. is incorporated in Delaware, and this is their employer identification number, or I-9. This is the company's main address and phone number. This is the top executive at the company. This is a key phrase. It means the shares aren't being sold all at once. They can be sold whenever it is beneficial for the selling stockholder over a period of time. This checkmark confirms that the sale of these shares will happen over time, not in a single big offering. This is common for resale registration statements. This tells us Autonomix is still considered a smaller company with reduced reporting requirements. They are an emerging growth company and have elected to use extended transition periods for new accounting standards. This means they can take advantage of certain regulatory flexibilities. This is the placeholder for the official date, the prospectus, which as part of this filing will be finalized and made effective. This is the document that gives potential investors details about the shares being offered. This is the core of the offering. We have a large number of shares that can be issued from warrants. Warrants are like options to buy stock at a certain price. Pre-funded warrants are a bit unusual. They're essentially shares of stock that come with an option to buy more at a very low price, allowing the holder to have a significant stake without paying the full price up front. In total, we are talking about over 13.5 million shares that can be sold into the market. So the selling stockholder here is likely an institutional investor who bought these warrants in a private deal, the PIPE transaction or private investment in public equity. They now want to sell the shares they get from exercising these warrants into the open market. The common warrants have an exercise price of about 86 cents and expire in 5.5 years, while the pre-funded warrants have a nominal exercise price of just $0.001 and essentially last as long as they are exercised. This is crucial. Autonomix itself isn't selling its own stock here. They won't get money directly from the selling stockholder selling the shares. The only way Autonomix makes money from this is if the selling stockholder decides to pay cash to exercise the common warrants. If all those warrants are exercised for cash, Autonomix could get up to $7.7 million. And this is a big but they have no control over if or when this happens. It is possible the warrants expire worthless and Autonomix gets nothing. So AMIX is the ticker symbol for Autonomix Medical on NASDAQ. As of a recent date, the stock was trading at $1.09 a share. This means you can't easily buy or sell these specific warrants on the stock market. They are not listed. This document is quite extensive and this table of contents helps navigate through it, offering a structured overview of the information provided. This section explains how to read and interpret the prospectus itself. It emphasizes relying only on the information provided or incorporated by reference and warns against assuming information is current after its stated date. This is the executive summary of the whole filing. Here is a quick look at Autonomix Medical's business. They are in the early stages of development, creating a new kind of medical device technology for nervous system disorders. This refers back to that private placement deal we mentioned where the investor bought the warrants. On the 18th of November 2025, Autonomix made a deal with an investor to sell them these pre-funded and common warrants. The price for each set of warrants was just over $1. The deal closed on the 19th of November 2025, bringing in about $5 million. Remember, this is before fees and it is for the warrants, not the actual shares. This is where they highlight the benefits of being a smaller, growing company. They are taking advantage of the Jobs Act, which allows them fewer reporting burdens. This means less financial disclosure and fewer strict rules for audits and executive pay compared to larger established companies. This can be good for them in terms of saving resources, but it means less detailed information for investors. This table summarizes key points about the offering. Again, this shows the total number of shares the selling stockholder can sell. This is a very important number. As of the 21st of November 2025, there were about 6.9 million shares of common stock outstanding. Now compare that to the over 13.5 million shares that can be issued from these warrants. This means if all those warrants are exercised and sold, it will more than double the number of shares outstanding. This is significant dilution for existing shareholders. This reconfirms the stock ticker and the fact that the warrants themselves are not publicly traded. This is where companies lay out all the bad things that could happen. It is like a disclaimer on steroids. They themselves acknowledge that the number of shares being registered for resale is very large compared to the current number of shares outstanding. This directly translates to a potential for significant dilution and a downward pressure on the stock price if many shares are sold quickly. This is a standard legal statement. It is telling investors that any statements about the future, like expectations or predictions, are just that, predictions. They are not guarantees, and actual results could be very different due to various risks. This reiterates the potential $7.7 million Autonomix could receive if the warrants are exercised for cash. If they do get money from warrant exercises, it'll just go into their general company funds for day-to-day operations. This section identifies who is selling the shares. This repeats the total number of shares available for sale by the selling stockholder. This explains how they calculate who owns what in terms of stock, based on their ability to vote or sell shares. They use the outstanding share count of around 6.9 million for these calculations. This is a repeated point from earlier talking about the warrants, but it is important for context. This is the name of the selling stockholder, Armistice Capital LLC. Here is Armistice Capital LLC owning over 13.5 million shares before this offering. These are the shares they get from exercising their warrants. This section details how the selling stockholder intends to sell the shares. They can sell the shares directly or use brokers or agents to help them sell. They have a lot of flexibility on how they can sell the shares. They can sell them at whatever the market price is at the time or negotiate prices. This is a bit of legal jargon, but it means that the selling stockholder or the brokers they use could be treated as underwriters. Underwriters have certain responsibilities and potential liabilities under securities laws. This section mentions their auditors Forvis Mazars LLP. They have audited the company's financial statements. Financial statements from the previous 2 years are referenced here. This is a huge red flag. The auditors have included a statement that there is substantial doubt about the company's ability to continue operating as a business. This is a serious concern for investors and suggests the company might be facing financial difficulties. These are the lawyers who are giving an opinion on the legality of the shares being offered. This points investors to where they can find more in-depth information about the company, including the CSE website. This is a very important section in SEC filings. It means Autonomix is including information from other documents they've previously filed by reference. This is a way to avoid repeating information and keep the current filing shorter. They are incorporating their most recent annual report. This is where you'd find detailed financial statements and management's discussion. They are also incorporating their last 2 quarterly reports. This gives a more up-to-date view of their financial performance. This part contains supplementary information not considered essential for the prospectus itself, but required for the filing. This table breaks down the costs associated with this filing. The total estimated expenses for this registration are around $36,000. This is relatively low for a public company filing, indicating a focus on efficiency. This section explains how the company will protect its leaders from certain legal liabilities. Autonomix is structured to shield its directors and officers from personal liability for most actions taken in their official capacity, as long as they act in good faith and in the company's best interest. This is standard in corporate governance, but does mean shareholders are limited in their ability to sue individual directors for certain types of mistakes or mismanagement. This lists all the supporting documents attached to the registration statement. This refers to the legal document that outlines the terms of the Series C warrants. This is the legal document for the pre-funded warrants. This is the legal opinion from their lawyers. This is the consent from their accounting firm to use their audit report. This is a section where the company agrees to certain obligations related to the filing and future disclosures. Autonomix promises to update this filing with new information if something significant changes while the shares are being offered. This ensures investors always have the latest details. This is where the top executives sign off on the document confirming its accuracy. Brad Hauser, the CEO, is signing here. This is a power of attorney section. It means that certain individuals have authorized others to sign documents on their behalf, specifically related to this registration statement. This is common for ensuring timely filings. Here we see the signatures of the key people at Autonomix confirming the filing. Now let's look at the big picture for Autonomix Medical. On one hand, they are developing innovative technology in the medical device space targeting significant unmet needs. The fact that they are filing for a resale of warrants suggests they have some level of investor confidence, at least from the initial private placement. However, the most alarming point is that auditors note about substantial doubt about the company's ability to continue as a going concern. It means the auditors are concerned the company might not have enough cash or resources to stay in business for the next year. This risk is amplified by the fact that the company is not guaranteed to receive any cash from the warrants if they are exercised in a cashless manner or if they expire. The stock itself, Amix, is trading at a low price, just over $1. And the potential for massive dilution from these warrants means existing shareholders could see their ownership stake significantly reduced and the stock price could be under pressure. Being an emerging growth company allows them to operate with less regulatory scrutiny, but also means less transparency for investors. Autonomix Medical is a company with a promising technology but facing significant financial challenges. The current filing is about enabling a large resale of shares derived from warrants, which could further dilute existing shareholders. The auditor's statement about going concern is a critical risk factor that every investor must consider very carefully. While the technology is interesting, the financial health of the company appears to be the more pressing concern right now. Alright, that is our breakdown of Autonomix Medical's S-3 filing. What is your take on these numbers and what they signal for the company's future? Considering that going concern warning and the dilution factor, what do you think investors should do? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And hey, if you want to discuss these findings further and connect with other like-minded individuals for even more insights, check out our Discord community linked in the description and pinned in the comments. Thanks for watching. See you next time.